Another one, Paul here. Today I'm going to be talking about a strategy which, ironically, when I first started to learn how to read charts, this is kind of the same position of where I was, like the first strategy that I learned. I came in to learn the stock market, and then I learned about the strategy, which is the 1348. And, I had help back then, but the indicators, it just didn't click enough for me. And this strategy, even though it's the strategy that I first started out with, I think, and after going through a whole bunch of different strategies, I think this is kind of like the best of them all. So it's ironic that I come back to this strategy. And today I'm going to be showing you how to use it. It's kind of a new and improved version for doing it with the stock market. And we're going to look at this formula. It does take a paid indicator. The paid indicator is optional. It's buyers versus sellers with the Trade Confident. Check out their channel. I'll put a link below. I'm not affiliated with them at all. But I kind of added their indicator to this, and it kind of helps out find, when you apply the 1348, and it kind of helps you figure out how long you need to stay in those positions, depending on whatever time frame you're looking at. But anyway, we're gonna look at a couple of stocks, and I'm gonna plug this formula in, and we'll see how it works. Okay, so if you've seen my last couple videos, it's still the same setup. We're gonna load it up here. This is kind of like how I set it up. Now there's the buyers and sellers, which is provided by Trade Confident. It's paid indicator. It's optional for the strategy, but in my opinion, it makes this strategy a lot more effective especially when you're doing stocks. Because the point of the strategy. Now let me show you how to set it up. First, you want to go to your indicators, and you want to search for CM EMA trend bars. You're going to click that twice, and you're going to put it with the settings of 13 and then 48, and that's what you have here. So you're going to be going by the 1348 strategy, and I have consolidation zones on here too, because it's good to find out when things are consolidating, but it's not really needed right now. But just if you want consolidation zones on there, it's important just to see all the consolidation zones. But the whole point of this strategy here is what I've observed from doing this strategy with the stock market. It works the best on the hour. Now there is a disadvantage of doing it on the hour, is you have to wait for the signal, and it may not be every day that you see it. So if you don't see the signal on the hour, the lowest I would do with the stock market, I would do 30 minutes or the 15 minutes. So if you do not see the signals on the hour, I would go to the 30-minute, and then I would go to the 15. But that's the cycle that I go through. When especially doing options, those are the three that I go through with this strategy. So what you want to do is you want to look for the overall trend here. Now, if you saw my previous videos, what we did, we focused on the hour, and then we went to a smaller time frame. But you're dealing with option contracts for the most part, and you want to make the most of your option contract. So you want to find the moment that is best for coming in for an options contract. So that's why I focus on the hour. And what I try to do is I try to see if I can find the signal at least once per week. What you want to do in this strategy, because the strategy here is, if you're doing options contract, you need to find at least $1 difference in price. If you're doing SPY, $1 difference in price is about $100. So anyway, the trading strategy here is pretty simple. You basically wait for the 1348 to cross, which we find right here. And then as it's crossing, this is basically where you enter. Now, if you have the buyers versus sellers, which is optional, but I find it works really well, you enter on a cross, and then you want to look at your buyers versus sellers. And the moment the buyer, you could hold on, but since you're doing a contract and they last about a week or You know, if you buy a week contract, you can hold this out for longer. But after it crosses, if you see that it is still going up in the buyers versus sellers, you see right here, it crossed right here, and then it's still going up in the buyers versus sellers. As long as it stays up in the buy zone, and it doesn't, if it doesn't dip in the red zone here, if it doesn't dip in the sell zone, you're good with your trade. That's how you know you can stay in the trade for a little bit longer. So anytime here, now, you know, if you're doing a week contract here, my goal here is I try to find at least $1 difference in price, but everybody can shoot for different numbers. But if you came in here and look at your buyers versus sellers, we are still in the clear to keep holding the trade. We are still in the clear. The lines have not crossed yet. Now this right here is a week. Or right about here is about a week. So if this was a week contract, you'd be doing with a $13 difference in price. This is about $1,310 doing one contract. So you look for your crosses with the 1348, and then you keep your eye on the buyers versus sellers. As long as your buyers versus sellers doesn't dip into the red zone, you're good. So let's just look at a couple other scenarios here. So if you caught this trade right here, this was January 18th, and the next signal on the hour was right here. So right here, it was a shorter one. Crossed right here. If we look at our buyers versus sellers, we can see that right here it started to get into the red zone, so I would have got out anywhere here. So it would give you a good entry point and a good exit point. So we ride out from here to here. This is almost a $5 difference in price in 2 days. So if you did a week contract, you would have made some pretty good money right there. I'm going to do this 2 more times with SPY, and then I want to look at some other stocks to see how this works. So the next time it crossed was right here. Now me personally, unless there's some kind of big news with the S&P 500, the general path that S&P 500 is going right now is up. So I focus on all the moments that the 1348 crosses up. Unless we know we're entering into a zone where it's going down, I focus on all the moments where the 1348 is crossing up. So anyway, we find that moment again right here. This is November 1st. And we can look at, let's just highlight this. We could just look at our buyers versus sellers, and the moment it goes into the red zone, we can get out. But this is 7 days right here, so this is a week contract. This is a $18 difference in price, so this is almost a $2,000 move. So let's just do this one more time with SPY, and then we'll look at some other stocks. Now here's a good example right here of when it's going down. It's the same thing. I want to let's teach you when it's going down too. This would be a put right here. You see that it's crossing down, and it's the same thing. If you focus on, as long as the line is in the sell zone, it does not go into the green zone, you're good. So anywhere from here to here, but this is 9 days. So if you want to do like a week contract, which is right about here. So this is about a, so if you're good and you can actually get about a week contract and you ride it out, you can get some pretty good profit. But my personal goal is I just look for $1. My personal goal. I try to find that once a week. But this is a $15 difference in price. This is a $1,563 move if you caught it. So let me do this one more time. Now this is an uptrend. You see it crossing on the hour. You see it crossing on the hour right here. So you would enter here. Then you would look at your buyers versus sellers. Realize it's starting to dip right about here. So you can get out right about here. This is a $10 difference in price. So you made about $1,000 right there if you rode that out. So that's SPY. Let's look at some other stocks here. The reason I like doing it with SPY, and the reason I trade SPY regularly, is because you can you can really pick up on the pattern, especially when the 1348 crosses. You get a general idea of where it's going. But let's look at some other stocks. Let's look at MicroStrategy, which is one of my favorites. Let's go through a couple of them. Now, MicroStrategy is connected to Bitcoin, and MicroStrategy, if you're doing option contracts with this, they are expensive. So just keep that in mind, especially if you're doing in-the-money contracts. They are expensive. So what you want to look for is the same thing. You want to look for a cross. So this one crosses down right here. This is when Bitcoin started tanking. So if you came in right here with MicroStrategy, it works the same way. It crossed on the 1348, and as long as it stays in the sell zone, you're good. You could have rode this entire thing out. Now, the contracts are expensive. I'm just going to tell you that flat out, but you can make a killing with this strategy. This is a $161 difference in price. This is, I think, a $16,000 move if you did an in-the-money contract. So this is really powerful, in my opinion. And if you look at buyers versus sellers, you don't see that it's even tipping into the buy zone yet. But let's just look at a couple more. I'm going to do two more. And look at some other stocks. Does it cross there? Yeah, it crosses around here. Let's just remove the candles so we get a better idea here. I see it crossing right about here. So that is your cross with the 1348. And what you want to do, it's the same thing. It crosses right about here. If you rode this out for 7 days. Yeah, 7 days right about here. This is a $108 difference in price. This is a $10,000 move if you did option contract. Let me do one more time with MicroStrategy. Let's do this small one right here. We see it crossing right here. We look at the buyers versus sellers, and it dips into the red zone right about there. So you can get out right about here. This is a $20 difference in price. So this is a small one. So let's go look at another stock. Let's go look at let's look at Apple. And I'll look at one or two more stocks here. Show you how this works. So we see right here that Apple has crossed 1348, and you could ride this out. Right here it crosses, and you could ride this out if you got your contract and you wrote it out for, well, right here. And you could still hold on to this right here because it's technically still in the buy zone, but it is getting weaker because you see the line going down. So I would have got out right here, but you could still get out here. It gets into the red zone right about here. So, but this is 8 days, so you would, if you wrote it out 7 days, this is a $10 difference in price. So let's look at the time it went down, was right about here. It crossed right here, and then we ride it out. It's still in the sell zone. Yeah, but this is 13 days, so let's just look at 7 days here for option contracts. There's 7 days, and this is a $2 difference in price. Do one more with Apple. Let's find a moment where it crosses, which is right here. Right here, and as long as the buyers sellers are in this, it dips right about here. So, and that looks like the end of a market to me. But this is a $5 difference in price. Let me look at one more stock. Let's do one more stock. Let's see. What stock should we do? Let's see. Let's do, actually what I want to do is, since we're in the Bitcoin halving moment, I want to look at some stocks that deal with Bitcoin mining. So I will go over a couple here. Let's go over, is it Mara? Mara? Yeah, Mara is a Bitcoin mining company. So let's just see if that happens. Now, when Bitcoin has its halving here pretty soon, this might work really well depending on certain mining stocks. But anyway, let's look at this one right here. This is Mara, and it crossed down here, so this is a put. If we look, as long as it stays in the sell zone, $7 difference in price. Let's see if we can catch it up. That doesn't look like it's crossing yet. Hide the candles, it's easier to see. It crosses right here. So this one it looks a little consolidation zone here to me. So this could have hurt you if you were doing options because of this consolidation here, the 4 days of it. But if you held out, you made $1 difference in price there. Let's look at one more stock. One more stock. Let's do NVIDIA. And I'm definitely going to probably be looking more into NVIDIA, especially when I start talking more about stocks. But anyway, we see NVIDIA, it crosses with the 1348 right here. So you come in here, you look at your buyers versus sellers, and it's good. But this is 11 days, so unless you want to do a 2-week contract, but it still keeps moving. So NVIDIA is a pretty good one. I'm definitely going to be looking at this more in the future. But 7 days worth, if you're doing a contract, this one was a $61 difference in price. So you see that this method works really well, but I think personally it works the best when doing SPY or QQQ when you're doing with the ETF. I think it works the best with that. So basically, you look for the 1348, you look for a cross. If you don't see the signal on the hour, go to the 30-minute. If you don't see it on 30-minute, go to the 15-minute, but those are the lowest time frames that I'll do. I won't do options on a 5-minute because the scalps, it's just, to me, it's not worth it, especially if you're going by the buyers and sellers. I look at longer time frame because you could end up actually finding a lot of those good moments of getting in, especially for option contracts. So to me, it's worth the wait. But anyway, that's how to use this strategy with the stock market. So anyway, that is the strategy. It's kind of weird how this strategy is kind of like, it was the first strategy that I learned, and to me, it seems to be the most effective going back. The only difference between this strategy and the strategy when I first learned about it is I added the buyers sellers indicator and the CM EMA trend bars, which kind of helped you figure out if something is bullish or bearish. Now, if you don't get the buyers for sellers indicator, what you need to go by is the color of the trend. So, and make sure you can do stochastic, RSI, MACD, things like that will help you out. But if you don't want to get buyers and sellers, but when you look at the color of the trend bars, it will basically tell you if things are starting to get bullish or bearish. But anyway, this strategy works really well, at least in my opinion. I might refer to it in other videos, but I'm really not going to be talking about a lot more strategy videos for a while. But anyway, if you like this video, make sure you hit the like button, hit the subscribe button. I'll see you guys in future videos.